That action stands for accepting all possible losses before entering a trade, preparing you for any outcome, setting yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting your education, strategy, trade skills, and intuition. Imagine your trade successfully materializing. Obey your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. So if everybody can hear me okay, drop me a one in the chat and we will get rocking. Appreciate it, Joy. All right. So we'll hop into trade economics. We got some updates on the trade talks with the United States and China. We have some other things to cover with Japan, and the market is moving. So let's hop over to trading economics first, and we will then ride from there. So, all right. So, um, uh, United States and China. Well, we'll come back to United States and China. We'll start today and then we'll walk back. US CPI likely to accelerate. Annual inflation rate in the US is expected to hold steady at 2.4% in April, matching the March figure. However, on a monthly basis, the CPI Consumer Price Index is forecasted to rise by 0.3%, rebounding from zero point 0.1, right? From zero point 0.1 decline in March, driven by, in part, recent tariff hikes on imported goods. Meanwhile, annual core inflation is also projected to remain unchanged at 2.8%, but the monthly rate is expected to rise by zero point 0.3 from zero point 0.1, right? So consumer price index is increasing, which means Fed is like let me do this. Then we have oil on the rise. Oil on the rise, right? WTI futures rose to 62.4 per barrel on Tuesday, marking its fourth straight gain. Um, and hitting a 2-week high as market forecasts shifted to from U.S.-China trade tensions to developments in the Middle East, right? Although the 90-day pause, which we'll come back to this, um, in the tariff conflict between the world's top oil consumers has eased some pressure. Attention is now on President Trump's visit to the region. His trip starts in Saudi Arabia, where discussions may influence OPEC plus policy. The Organization of the Petroleum Exporting Countries has boosted its oil output by more than previously expected since April, with May output likely up by 411,000 barrels per day. Also, Saudi Arabia has begun urging the group to raise output to discipline members who have failed to meet their quotas. All right, which has weighed on prices recently. Despite hopes tied to easing trade tensions, oil is still down over 10%, um, since early April, when the U.S. trade fears raised fears about weaker global growth and reduced oil demand. Okay, so we have oil on the move. We'll see what happens with Donald Trump's visits to the area and if there are any changes to the policy, uh, potentially continue increasing the price of oil. All right. So that's crude oil. We have UK wage growth, right? Regular pay, excluding bonuses in the UK, rose by 5.6% year on year to 671 per week in the 3 months to March, lower than the 5.9% in the previous period and less than market expectation of 5.7, right? So average earnings, um, they increased on the year, but they were below the market expectation. Okay. This marks the lowest reading since 3 months to November for the final quarter as wage growth slowed for both private sector and the public sector. Um, so that's where we are with wages in the UK. And then the number of payrolled employees in the United Kingdom dropped by 33,000 or 1.1% to 30,300,000 in April, um, following a revised 47,000 decline in the previous month. This marked the third consecutive monthly drop as the 26 billion tax increase went into effect and as United States Trump new tariffs weighed on the global economic outlook. All right. So, the number of employed individuals decreased. Okay. That's what that means there. So that's where we are out of the UK. All right. Over to the, actually, before we do that, let me, um, United States and China. That's what we want to talk about. I'm looking for the articles. Um, mm, mm, mm. Don't have the article, but what we have is um, they implemented United States and China. Um, they agreed for the next 90 days to lower U.S. tariffs on Chinese imports from 145% to 30%. And China will reduce tariffs on U.S. goods from 125% to 10%, right? Back to the previous levels before this increase over the next 90 days, right? That's the duration of this negotiation window, with the ability to extend the negotiation window. Um, Certain sectors were excluded from this conversation, most importantly, fentanyl. Those tariffs will stay in place. Both countries have committed to continue ongoing negotiations aimed to resolve the broader trade issues and preventing that economic decoupling. All right. So what this means is um, the market feels better, right? We're seeing risk on across the market because those tariffs are have been decreased. Um, Investors and market participants are comfortable putting their money back into risk assets um, and spending a little money. Okay. Now there are some concerns, right? This 90-day reduction, it was definitely a positive, it was seen as a positive development in the potential for longer term agreements. However, there's still a risk. A lot of market participants still see in there some move with caution because there's a risk to re-escalation, right? Without substantial progress during this 90 days, there's a risk that the tariffs could be reinstated or increased, right? So it'll be interesting to see how the conversations go between the two countries over the next 90 days while they're not in person in Geneva, um, and see how those go and how the market then takes those conversations, right? Yeah, exactly, Joy. More like 45 minutes. And then, right, despite the temporary relief in the market, the high base tariff rates continue to affect trade volumes, as well as economic growth in both countries because, right, the products that those tariffs are on are either sitting somewhere because they still can't be sold because businesses aren't going to lower their prices because they had to pay higher for them, Um, and then, right, there's a cycle that you have to go through, right? So there's a delayed uh, impact on the market. And so over the next 90 days, you'll see the impact of those tariffs that were implemented. And then over the next 90 to 120 days, you could then potentially start seeing the impact of this break in this negotiation um, period. So the market is still going to feel impacts, right? And so that part will be interesting to see how investors take those impacts as they start to trickle in, starting with these CPI numbers, um, to then kind of gauge how the market is going to move overall, right? So that's what happened between the US and China um, over the weekend, right? Uh, Yesterday, you also had um, Bank of Japan meeting minutes. And the overview there is that the Bank of Japan, their approach indicates a willingness to adjust its policy stance in response to the evolving economic conditions, right? Balancing the need for economic support and the goal of price stability. They had some positive takeaways from the data. Um, so they were cautiously optimistic, right? Um, the underlying inflation continues to rise, supported by a tighter labor market and ongoing wage growth, right? But the bank also acknowledged that the outlook for the economic activity and prices is subject to significant uncertainties, um, and they have to monitor those accordingly, right? Their goal is still to get to 2%, but they're open to they recognize the words that were used, they recognize that their timeline could be extended, right? To get to that 2% target, meaning that the timeline in which they change their interest rates to get to that target could be pushed out, right? That's significant because the Bank of Japan, we know, right, when they make a decision, they stand on that decision. And so, with them being cautious and pushing out their potential rate hikes, that caused at least short-term temporary weakness in the yen, right? And so those yen pairs will be moving um, in the opposite direction. Okay. And they'll continue to monitor global developments, right? And U.S. tariff actions and U.S. policy. So that's an update on the Bank of Japan from those meeting minutes that came out yesterday. Um, Unemployment change for the UK, right? You had a boost of 5,200, right? A number of individuals applying for unemployment in the UK. So that's the number there. There's the average hourly earnings that we discussed. Later on today, we have core CPI, right? And talked about that. Going to be a number to watch to see where that falls this month and how those numbers start to roll in from the impacts of the tariffs. You got Governor Bailey speaking at 11 o'clock. Then we got wage prices out of Australia tonight. Tomorrow, we have FOMC members speaking. We got crude oil inventories. Um, and then out of Australia, employment change and unemployment rate. On Thursday, we got GDP for the pound. We have core PPI data, producer price index, right? The what businesses are paying to produce the goods. Also big numbers, retail sales will also be important, and unemployment claims. All right, and then you got Empire State Manufacturing and Philly Fed manufacturing indexes as well. Just measuring the manufacturing production. Then you have Jerome Powell speaking at 8:40 on Thursday as well. New Zealand inflation expectations. On Friday, we got Chairman Siegel from the Swiss National Bank speaking at 7 a.m. And then you got consumer sentiment, U of M consumer sentiment, and U of M inflation expectations on Friday as well, right? So slower week, but you got some big data the next couple days that'll be important for market participants. All right. So that's where we are from a fundamental perspective. Any questions, or do you guys have anything that you want to bring to the table? No, no. All right, cool deal. So let's get to the charts. The dollar is on the rise, right? With the trade tariff negotiations, right? You saw a boost, strong boost, right? Market market open, right? Boom. Strong push to the upside. Okay. Um, and that makes sense, right? You have more transactions happening with the dollar. So the DXY moving to the upside, right? You also have the stock market moving to the upside as well, with more of a risk on appetite in the market. Okay. So out of this 80-20 zone, shallow retracement 118, 127. It took a while, but it's pushing to the upside, right? We don't have a time on how long these moves take, but we know that when price pushes into the zone after shallow retracement, we're going to get that move at some point, all right? So we're sitting at a 50% retracement right now. We're retesting the cloud. Cloud is still bearish ahead. We still have a stochastic in the sell zone, okay? Um, so we'll watch and see how things develop over throughout the week, but pushing to the upside, right? So as of now, what we're expecting is pullbacks on the lower time frame and continuations to the upside. Okay. Um, so down to the four, see that 80-20 a little more clearly there. The shallow retracement, your 118, 127 zone, and we're moving to the upside. So now, right, we just wicked that 382 right there. We got to that level, so we're looking for that D extension to be achieved, but we'll likely get a pullback first, right? Maybe come back and retest this B boundary and then continue moving to the upside. Okay. So we're tracking the ABCD waves on the lower time frame as price continues to move up, and then we'll see where things go from there. Okay. Um, but moving to the upside as of now. All right, and there's your 1 hour time frame. There's your fresh AB boundary, and we'll see if we get a deep retracement there, and then that continuation to the upside. Okay, so the dollar is gaining strength. What that means is our dollar crosses, right? Aussie dollar, euro dollar, pound dollar, New Zealand dollar would be moving to the downside, right? And your dollar pairs, your dollar CAD, dollar yen, dollar Swiss moving to the upside, right? Because we have dollar strength. So with that, we come to the dollar yen. Boom, right? Continue to move to the upside, and you see, right, end of last week, it really started to move, and then we got a continued acceleration. Okay, so we're deep in the zone here on the AB boundary. We're testing the cloud. We'll watch to see how things evolve here. Okay, we'll see how things evolve. Um, but that's where we are on the dollar yen. Come down to the four. Okay. And you see, right? 786 retracement, matching extension achieved on the explosive move yesterday. We got to that D extension level there. Swing high formed, your fresh AB boundary presents itself. So now we're looking for retracements and continuations. Okay. So on this one, we'll see if we get a deep retracement first, or right, we have this shallow retracement right now. Do we continue the momentum to this 151 level, giving us an 80-20 before we see a retracement occur? Okay, so watching this level here to see if we get a setup for that counter trend move and the 80-20 back down to the downside. Okay, so this is where we are on the 4 on the dollar yen. We'll come down to the 1 and you see that a little bit more closely there. All right, similar look as the 4. Do we get price to push into that 118, 127 zone, setting up that 80-20 on the 1 hour as well? Okay, so that is the dollar yen. Are there any questions here? No? Okay. Let's take a look at the S&P 500. Right, you see that acceleration. So we had fibs running to the downside, and I said I'm watching this 57.89 level to see if we stay below that or if we break it. And we got a strong bullish break, right? So that means at least in the short term, we'll see continuations to the upside, right? So we took out the A boundary, right? And what happens when we take out that A boundary, we flip the fib and we run it in the other direction. And so now where we are, we're sitting in this 118, 127 zone, right? We got a shallow retracement, 118, 127. We broke the cloud as well, right? Strong bullish break of the cloud. We got bullish cloud ahead, right? So we're looking at more movement to the upside coming. Stochastic still relatively higher in the zone, right? So still some selling pressure could come in. So we took out that resistance, boom. So now we're looking at 80-20 on the daily. Okay. So do we get a pullback? Do we get a pullback before continuation? Okay. All right. So 80-20 on the daily on the S&P. We come down to the 4 and we're sitting right in that zone. Okay. So looking for a retracement to come here. We'll watch the developments, right? We got data coming out today that could be the catalyst, right? The fundamental catalyst to move the market in the direction that we desire. So we'll watch and see if we get things to line up for us for a retracement here. Okay. And look for a pullback and then a continuation to the upside. Okay. So tracking this here, here's an 80-20 on the S&P 500. Okay. I'll look for price to get at least that 382. As our TP1 and then our TP2. All right. So that's what we're looking at there on the S&P 500. Do we have any questions? No? No? All right. Cool deal. NASDAQ, same thing, right? We had those fibs running to the downside. We took out the A. Here we're sitting right at this previous support level, right? Previous support. Price stopped there. And we'll see if we break that level, which we could. Strong bullish break of the cloud, right? And we're bullish on the cloud ahead. And we got our TK crossover back here. Okay. Our lagging span is also above price. So that gives us the indication that we can see continued movement to the upside. Okay. So market is bullish right now. Okay, we got another level at 22,000 that we'll watch and see how the market responds there. Does this end up being the reversal point for the market to track higher, or do we get to these levels and then get reversals? Okay, so it's yet to be seen. So we're down to the four, fresh AB boundary on the 4 hour. Okay, hit our D extension here. We've got a swing high to form. So now we're looking at, do we get another push into the 118 and 127 zone to give us that 80-20 for the reversal, or do we get the reversal first in the continuation? Okay. I'd love to see this action here and then giving us that opportunity to move back down to the downside. Okay. All right. So NASDAQ moving long, looking for a retracement, right? So as we continue this hunt for 80-20s, we'll continue to watch the market here to see if it sets us up for it and gives us that opportunity to get back short here, at least in the short term. Okay. Questions on the NASDAQ? No? All right. Cool deal. Talked about oil. Let's take a look at it. Whoops. Still running long, right? We identified that double bottom, right? Benny broke down market movements and patterns on Saturday. If you missed the session on Saturday, I highly recommend you go watch the masterclass, right? Um, broke down the double bottom, really broke down the 80-20 in a beautiful way. And so now we're moving to the upside. Okay. So cash is pushing into that sell zone. So we're getting overbought, right? But as of now, we're moving long. Okay. We hit this previous resistance level here. Price stalled a little bit. Now we'll see over the next couple days if we're able to break that level or not. Okay. Um, so watching that there, and we got another resistance level here. Okay. So watching that zone to see if we stall and get a pullback, right? Price been moving to the upside for quite some time. And so we know the market moves in waves. So there's going to be a pullback to come at some point before we get a continuation. So we come down to the four and we'll track those waves, right? ABCD waves here, 618 retracement matching the extension is there. New fib hasn't popped in yet, but that new fib would look like this. Okay. So we got a shallow retracement happening right now. And so we'll watch to see if we push into the 118, 127 zone before we get the retracement, or do we continue the waves down, retesting the cloud, and then continue to the upside. Okay, so that's what I'm watching here is what direction we move first, right? We get this 618 retracement and retest the cloud. Beautiful opportunity to enter that trade or add to your trade or the move to the matching extension. Okay. So moving to the upside right now on oil. Okay. We'll see what happens with Donald Trump's meetings and all of those things with OPEC. Okay. We come down to the one. Pull that out. Down on the one, there's our fresh AB boundary, similar scenario as the four, right? Shallow retracement. Do we push into the 118 and 127 zone first, or do we continue this move down, getting us to our deep retracement level for that continuation to the upside? Okay, so watching that as it moves, nothing happening right now. Good morning, Deb. Nothing happening right now, but watching to see where price heads and do we get our opportunity to enter that trade at that deep retracement level. Okay. So that's oil. Any questions on oil? Oh, okay. Cool deal. Cool deal. Some of the pairs that we talked about this weekend, Aussie CAD. Okay, this one is still sitting high in the zone. Okay, we got two commodity currencies. You got oil that backs the Canadian dollar, and then Australian dollar, which major trading partner is China, right? So you got a battle that's happening right now. Okay, you got oil pushing to the upside. You got oil pushing to the upside, but you also have a risk on environment and some relief in China, right? So pushing up right now, but you see the indecision that happened yesterday. Okay. So we could see this continued back and forth. I'm watching this 94.33 level to see if we're able to stay below that level or not. All right. Ultimately staying inside the AB boundary, but how deep does this retracement go? Okay. So we haven't gotten signs of the reversal just yet, but we'll continue to watch and see if we stay inside that AB boundary. We'll look for that move to the matching extension based on the retracement. Okay. We come down to the four, and there we are. Okay. So just shy of a 786 retracement there. Okay. And we're just starting to consolidate. All right. So we'll continue to be patient there. Um, and we'll look to see how the market moves. Okay. We'll look to see a trend line break there and a move back down. All right. So we'll watch that and see. If we stay in this risk on environment, it wouldn't surprise me if we do take out the A. Okay. Especially with positive news coming out of China. So that wouldn't surprise me at all. But Australia is in a place where, from a currency perspective, where things are starting to deteriorate a bit. So we could see this turnover at some point and move back down to the downside, be it before we break that A boundary or even after. So watching that there, and I'll just continue to track that to the upside with the trend line, and then wait for those additional confirmations of a trend line break or a cloud break and a move back down. Okay, so that's on the four. Down on our one, there's our larger 80/20 on the one, right? Just missed that 382, right? So we're sitting in that 118, 127 zone there, looking for additional confirmation, right? So we move that trend line outside to the outermost point of the consolidation, and we look for a trend line break if it's to come. Okay, so still tracking sideways here, still in that consolidation. Okay, so we need a breakout of that in order for us to know where we're going. Okay. So that's the Aussie cash, still sitting in the 118 and 127 zone. Questions? No? Yeah. I'll take a quick peek at this Aussie yen, right? We'll continue to move to the upside here. Makes sense, right? We said risk on environment, Aussie commodity currency, the yen. Um, Joe, you had a limit order on the Aussie CAD. I like it. I like it. All right. Just continuing to be patient there. I haven't taken that entry yet. I'll be doing that today. Um, this Aussie yen, right? Australian dollar commodity currency, yen safe haven currency. Bank of Japan cautious stance. trade negotiation progress with China and the US, you see the Aussie gaining strength, right? We've been talking about the yen weakness for a while, and you see that kicking in, right, and moving to the upside here. So we're coming into a level of resistance at this 95,472. So I have to watch that to see how the market responds there. And do we get a move back down, or are we able to break through that level and continue this trek to the upside? Okay. But right now we're in a deep retracement zone. This is one that I don't expect to turn around just because of the state of the yen at the moment. So I am looking at this to continue moving to the upside and break through that daily level. Okay. My thoughts based on the yen in the Bank of Japan. Okay. So we come down to the 4. Similar narrative here. We're at 8-6 retracement. So you broke that outer trend line. We're above the cloud. Okay. So that move down may not happen. Okay. Um, we broke the trend line. That's our outer trend line. Okay. So we're headed to the upside. So I'm looking for the day boundary to be broken. Okay. Um, but pushing long. So what we'll do is we'll run our fib off of the low and track the ABC waves to the upside. Boom. Okay. And I'll remove this one. So we just got it there. Okay. So we're moving long. And so we'll watch here, fresh AB boundary. Are we able to push into the 118, 127 zone before we get our retracement set us up for an 80-20 here? So we'll watch that and see. Okay. So that's on your 4. Come down to the 1. Got our fibs running to the upside, similar to that 4-hour fresh AB boundary there. Okay. We can take that trend line off. And that's what we're looking for. Okay. Push to the upside into that 118, 127 zone and see if we get a retracement and a low price for us to continue to move long. Okay. Just tracking those ABCD waves. Okay. Do we get the retracement to come here? Or do we push into the 118, 127 zone for the retracement to come there? Okay. All ultimately looking for a low price to get back long. Unless things change fundamentally. Okay. So that's where you're on the Aussie yen. Okay. Moving to the upside. I expect it to continue to move to the upside. Okay. Questions? Nope. Okay. Aussie dollar. Still lingering around here, right? Started its move to the downside. We just missed that 118 level on the daily, right? Started to move to the downside and we got some consolidation back and forth. Why? Because you have the dollar, which has gained some strength, right? But you also have an Aussie dollar who benefits from a risk on environment, right? And benefits from positivity coming out of China. Okay. So that's why you have this back and forth happening right now, is that tug of war is going on. We're at an equilibrium in price, right? Fair price across the market. And now which currency takes the dominant stance here, right? Is it the dollar or is it the Australian dollar? Okay. So we got some consolidation happening here. We come down to the 4 and we're still hovering just below that 118 level. Okay. We got our trend line break. Okay. So that was our additional confirmation trend line break there. You wanted to wait until you got the cloud break. You got that here. Okay. So you got your additional confirmation of a move to the downside. Now it's just waiting on that full breakout for that move down, right? We got Australian dollar data coming this week, right? You got wage price index on as today. Wage price index today. You have employment and unemployment rates tomorrow. Okay. Um, And that's it, right? So you got news coming today and tomorrow on the Australian dollar that could impact this pair and allow for this 80-20 to continue its trek to the downside. Okay. So we'll watch the developments and see how it goes. But we got a nice move down. We're pulling back. And now we're looking for another leg to the downside and the 80-20 making its way. Okay. So we'll come down to the one and we'll look at this from a 1 hour perspective. Right. And it's already been a nice move down. Okay. So now if we run our fib off the high on this, boom. So we got an 8-6 retracement tracking our 80 ABCD waves, right? Our A, our B. Oops. Our A and our B. Here's our C, the deepest point in between that AB boundary, 8-6 retracement. And now at some point, we'll look for price to get to that 118 extension. Okay. So looking for another move down. Okay. So watching that there. And if you go down to lower time frames, you can see these smaller waves that are developing here. Okay. Boom. Right. So this A here, right, is your C here. Okay. So there's your AB boundary. You had an 80-20 here on the reversal. We're just at a 382. Could we push a little bit higher? Absolutely. Right. But we got our pullback and now we're looking for a continuation. Right. On this lower time frame, it'd be a C to D move. Right. And this takes us back to this 1 hour time frame and that move continuing down to that D extension. Okay. So moving ABCD waves to the downside, right? And this is that fib on the lower time frame. So that's tracking to the downside. That extension is there below the D extension on the 1 hour. Okay. So headed down, looking for that D extension to be achieved. Okay. So if anybody's in that trade to the downside, continue to be patient and allow the market to do what it does. Right. Again, there's no time frames on how long these moves take. We're not in the business of timing the market, right? We're in the business of processing transactions for profit, right? And these ABCD waves give us that opportunity to process those transactions, right? No time frame. We just process transactions for profit. Okay. Questions on the Aussie dollar? Nope. All right. Swiss yen moving to the upside. All right. You got a battle back and forth between your two safe haven currencies. And again, right, looking at the state of the yen, you got yen weakness. And you see that across the board, right? So you got a 50% retracement here, and you see your ABCD waves moving to the upside. So we'll see if we're able to break this 176,463 level. Um, but would like it to, and would like it to make it to the matching extension. That's actually a high there. Um, so we got a 786 retracement on the capital fib, all right? So the matching extension is here at 183,608. Now that would give us a new high. So that's something that intrigues me there. Um, is do we get there? Do we create a new high on the Swiss yen? Which, if you look back, right, that's all we've done over the past couple years. just create new highs. So watching the range that it's in, top of the range, bottom of the range, back to the top of the range. Are we able to finally break this level and continue moving along? Is what I'm looking to see. Okay. Um, so watching it at this 176 level to see if we're able to break out and continue moving along there with that yen weakness. So we come down to the 4, right? Just missed that 50%. So we got a 382 on the retracement and we're moving to the upside. Okay. Moving to the upside. So again, looking for these levels to be broken as we continue that track. Okay. And then on your 1, you just wick that 382 level there and we're headed long. Okay. So again, yen weakness across the board, you're seeing that filter in. And so it's about being patient, allowing those moves to play out. Okay. So that's the Swiss yen. Not a lot doing there. I know we looked at the Euro Aussie over the weekend, and we're still continuing to move down. So these are waves on the daily time frame, right? Moving down, sitting at a 786 retracement right now. We broke this daily level, right? In this move down, we got a stochastic that's exhausted, but because we're in a risk-on environment, right? The Australian dollar is taking the precedence here. Okay, so we broke that level. Hold on one second. Um, but we're still pressing down, right? We haven't got that reversal yet. Okay. So we'll see if we're able to settle in inside this AB boundary on the daily time frame. Okay. So this is where I'm watching this move now, because as we get down to the 4-hour time frame, which we were originally watching this move, we took out the A. Okay. We took out the A. So this one is no longer valid because that A boundary got taken out, right? So that trade is done. Okay. And if we had a position on that, we would have lost that trade, right? We would have been out. What was that? 215 pips, right? Which is okay. It happens. So now we look, that A got taken out. So we flip the fib, put it in the opposite direction, and look where we are. Okay. We got a shallow retracement. We're pushing down. Got a 118 and 127 zone. We got a key level of support. Okay. So now, same rules apply. We wait for price to push into the zone. We're sitting right at that 118 level right now, but do we push deeper into the zone? And then do we get to this 170 level, which is a monthly support level, right? Do we get to that level before we settle in and get a reversal? We'll see, right? But we got a shallow retracement. We're trying to push into that 118, 127 zone there. So we'll watch this 80-20, watch it develop here on the 4-hour time frame and look for some consolidation to occur and look for a reversal opportunity. Okay. Uh, all right. So there's our 80-20 opportunity here, waiting on price to move into the zone. All right. So be patient and allow price to get there. Don't rush it. Place your stop outside that D extension. And boom. Okay. That's what we're looking for on the Euro Aussie. All right. See if we get that reversal. Okay. Go down to the 1. Didn't want to do that. Down on the 1. Same thing that you see there on the 4. But here, right, we got our shallow retracement. We push through that 118, 127 zone, right? So do we get to the D extension first? We saw on this 4 hour, right? That support level is just below that 127 level. So there's potential on the 1 hour that we do get to the D extension first here, right? But we have an 80-20 here as well, right? So do we reverse here at this level, or do we push deeper for that higher time frame, 80-20? Okay, so your choice on what time frame you trade this on, but there's an opportunity here as well. Okay. Cool. That's the Euro Aussie, good people. Questions?
Can you show the daily again? What did you?
Daily?
Yeah.
Yeah, daily is sitting at a deep retracement level on it. Um,
Okay.
786 retracement right now.
Okay.
Okay, so that's where we are. All right. So we got a deep retracement on the daily. And so looking at this, right, multiple perspectives here. If we get price to settle in here, okay, if we get price to settle in here, we have an 80-20 on the 4 hour and an 80-20 on the 1 hour, setting up a reversal that could lead us to the matching D extension on the daily time frame of 188. Right? If we get those reversals in that zone, right, push a little bit deeper potentially, right? And then we get a reversal. Crown type pattern. Leading to the matching D extension. Right? So you take this fib and you translate that down to finding the entry on the lower time frame. Okay. Questions? No? Euro dollar, and we'll end here. All right. We just missed that 118 level on the daily, but you see dollar strength and you see the correction. All right. So now we're coming into our sweet spot now, right? We're at a 50% retracement. We're able to push down a little bit lower to get to that 618 level and settle in. Maybe we push deeper than that. We got a stochastic in the buy zone. Okay. So the market is oversold. Are we setting ourselves up for a retracement here, right? At some point. Okay. Come down to the 4. And we've been waiting on this, right? We've been waiting on this retracement to get to that deep retracement area, 618 or deeper. Got previous levels of support here, right? So now, are we able to get another leg down and push into this zone that we've been eyeing, right? It's about patience, right? We drew this up back at the beginning of May. Okay, beginning of the month. So we're going to wait for price to come down to the zone and see if we get it to settle in, give us an opportunity to play it back to the upside. It's making its way, right? And so we'll continue to be patient, allow price to push into the zone, and then we'll have our trade set up that'll look like this. Okay. That's on your 4. Okay. Come down to the 1. You're already at your 618 retracement level. Do we get a deeper push here? All right. But if you're trading on the 1 hour time frame, right, you're waiting on your entry confirmation. Okay. I won't have time to look at that this morning, Joy, but I'll definitely look at it live tomorrow. I'll look at it when I get back from dropping the kid off. But okay, I got you. Yeah, we'll definitely talk about it. But looking for your additional confirmations. Okay. And if you don't get the additional confirmations, you don't take the trade. Right. So if you're looking for a trend line break, you haven't gotten that yet. Right. You haven't gotten that yet. So we wait. If price continues to consolidate, we'll continue to adjust that trend line to the outermost point, right? Until we get the trend line break, until we get a bullish break of that trend line, right? We could get to that trend line and push deeper as we're looking for anyway, right? Give us a deeper push, and then see our reversal in our trend line. And that's okay too. All right. So your USD, we're waiting for the reversal whenever it comes. Questions? Questions on anything that we covered this morning? Nope. All right. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. You guys have a phenomenal Tuesday. Peace.